Good morning, ladies and gentlemen. I am finally back. I have been out for 3 weeks with COVID, was not feeling well. I still can't taste anything. It's been 2 weeks since I've been able to taste anything. It's so freaking weird. Still feeling some weakness and some fatigue, but overall, feeling a whole lot better. Thank you so much for all of your patience, your kind words over the past several weeks. I really do appreciate it. In today's video, we're going to talk about Joe Biden's plans for capital gain rates and how it will especially affect those who earn a lot of income annually. Welcome if you're new to Money and Life TV. My name is Mike the CPA, and we teach finances, investing, and taxes here on this channel. You can follow our weekly videos simply by hitting the red subscribe button down below. Oh, and I'd really appreciate it if you drop a like on this content to help this information reach more people. Thank you so much. Essentially what Biden's looking to do and why he's doing this is he wants to help fund childcare and education related expenses. And to do this, he's going to raise the capital gain rate on wealthy individuals. And by wealthy, I'm not talking about their net worth. This isn't about net worth. This is about people who earn $1 million a year or more, in which he's going to tax them on their capital gain rates up to, we believe, anywhere from 39.6 to over 40%. Now, I get that you probably don't make $1 million a year or more. Most people don't, right? If you make $400,000 a year here in America, you're in the 1% of income earners. And if you make $1 million or more, you're in the upper echelon of that 1% group. For most Americans, the capital gain rate table structure is going to look exactly the same as it always has been, even under Biden's plan here, where if you make less than $40,000 a year and you're single, you're going to pay 0% on your capital gains. If you make between $40,000 and $250,000 and you file single, for example, you're only going to pay a rate of 15% or up to 15%. It's not until you go above $250,000 in income as a single filer that you would actually pay 20% or more. For married filing joint filers, you can see unless you make above $500,000 a year, you're basically going to pay 15% or less on any capital gains you receive from qualified dividends, long-term stock sales, and so on and so forth. But the reason you still want to keep on top of this is what starts off by only affecting those who make $1 million a year or more could be modified in the future to affect you if you make, let's say, $400,000 a year or $250,000 a year. Oh, and by the way, this affects all different types of asset classes. Anything that could be affected by capital gains, this affects. So this could affect your dividends, your qualified dividends. This could affect, obviously, your stock sales. But more so, it could also affect sales of rental properties, sales of businesses, and other type of assets. So this affects all sorts of different things, not just stocks. That's important to note. But look, guys, I wouldn't worry too much about this right now, though, because we're not sure if this is even going to pass. It's still got to go through Congress. I think there's going to be Republican opposition and as well as even some Democrat opposition. So there's no guarantee this is going to pass. It might get scratched altogether. They might not want this at all, or they might look at what Biden put together and just modify it into something a little bit different than what he's initially proposing here. So what can you do about this right now? Well, first of all, I don't think this is going to even take effect, if at all, until 2022. So you do have time. If you're someone who makes $500,000 a year, up to $1 million a year, well, then you might very well look at liquidating some of your large capital gains in 2021, if that makes sense to do so. So you might look at that. We have several clients where I work who routinely make $1 million a year or more, and they have decided to sell their business early. They've been selling off some of their rental properties right now. They're doing certain steps to liquidate things right now under the current capital gain rates, which are much lower right now than what Biden is proposing. Right now, for the richest individuals who make, $500,000 to $1 million a year or more, the highest capital gain tax rate is 23.8%. And the way you get that is you take 20% plus the 3.8% net investment income tax. With Biden's plan, these same individuals, if they have capital gains of any kind from any type of asset, they instead of paying 23.8%, the difference is they would be paying about 43.4%, which is 39.6%, the highest marginal tax rate, plus the 3.8% net investment income tax. And that would be federal tax only. So you can see why the richest people are like, I gotta liquidate now. If I need the money right now, I gotta get out right now and pay half the amount of tax, essentially, than I would have otherwise. And I want you guys to see this. And not that you really care, but it's just kind of interesting. So if you're making $1 million a year or more under this new plan, first of all, across the US, you would on average pay 48% of every dollar you gained in profit from your sale of your investment or from your qualified dividends or whatever. But look at California. If you are killing it in California, basically you're given 56.7% in taxes for every dollar you earn once you add the federal amount on top of that. So about 60% of your gains go to the government. And same with Oregon's pretty close to that. New York's pretty close to that. Minnesota. So you can see, but the average though across the majority of the United States is going to be around 48% if you make $1 million a year or more on whatever capital gains you might have if this passes. According to the Tax Foundation, they say in using the Tax Foundation General Equilibrium Model, we find that raising the top capital gain tax rate to 39.6% for those earning over $1 million would reduce long-run GDP by 0.1% and reduce federal revenue by about $124 billion over 10 years. So they're saying this will actually lose money in the long run. It says under Biden's proposal for capital gains, the U.S. economy would be smaller, American incomes would be reduced, and federal revenue would also drop due to fewer capital gain realizations. Other proposals, such as partially repealing step-up in basis for capital gains, may help offset the realization effect and increase federal revenue, but it remains important to consider the combined tax rate on capital gains in the context of the president's tax proposals. This article is from Morningstar, and this is highlighting some of the behavioral changes from these proposed tax hikes on capital gains. So basically, the typical strategy of holding highly appreciating assets in taxable accounts like growth stocks, precious metals, land could become very disadvantageous in the future if you're going to end up paying like double the rate you're usually used to paying on any gains you make. So I think this will affect the way the rich invest moving forward. They're going to try to use more tax advantage accounts, or they're going to try to defer income. So check out this article from Morningstar. I'll leave the link below to read on this. I think it's got some good pointers, and also it has some good tax planning tips, and it talks about why you might not want to use an installment sale if you're going to try to sell a large asset or piece of real estate, why an installment sale could actually be a bad idea for you moving forward if this passes. The other thing is if you're not going to liquidate a lot of your capital gains in 2021, then you might be incentivized just to hold that property even longer and thus decrease the supply of available real estate, land, whatever for others in the future because you don't want to pay those high taxes. Or you might try to hold off until the tax law changes to be more advantageous to allow you to sell the property at a more fair rate. The rich investors might start to look more towards dividend stocks versus growth stocks if they're going to maintain their taxable account, because often it takes a lot of assets and dividends to generate a large income, and their goal would be to keep their income as low as possible. So they're going to probably gravitate towards a lot more dividend paying companies like your Johnson & Johnson's, your Home Depots, your Pepsi's, utility type of stocks, things like that, versus these high flying tech stocks like Uber, Tesla, Microsoft, Apple, where some of these people are used to making, hundreds of thousands of dollars a year in capital gains from these stocks. Well, they might gravitate away from those so that they don't bump their income too much to stay under that $1 million threshold. So they're going to do whatever steps necessary to keep their income low. They're going to work less. They're going to reshuffle their assets however they need to get their income as low as possible. Now it's time to hear from you guys. Let me know in the comments what you think about this and how do you think it will affect the behavior of the richest investors. If you were in their shoes, if you had an income near or over $1 million a year, would you be more likely to invest or less likely to invest, knowing that such a high percentage of whatever you make, on top of whatever risk you take to earn that, is going to go to the government? How would this affect your behavior? What would you do differently? Let me know in the comments below. It's been so nice being able to come back on camera and speak with y'all again. I've been really missing this. Leave a like on the video if you enjoyed it. Share this information with your family and friends. A lot of people, if they just sell a property or two, they're at that $1 million mark. So I do think they need to know about this. So please be sure to share this information with them. Subscribe to follow our future videos on finances, investing, and taxes. Have a great week, everybody. I'll see you in the next one. Peace.